Hello and welcome to Bitcoin Dorks, your go-to channel for daily updates on the cryptocurrency markets and important news. Today, we'll be discussing the latest developments in the world of Bitcoin as the digital asset soars past the $30,000 mark. In a stunning turn of events, Bitcoin has seen a massive surge in value over the past few days, reaching new all-time highs that haven't been seen since the historic bull run of 2017. As of today, the price of Bitcoin has crossed the $30,000 mark, a significant milestone for the world's largest cryptocurrency. So what's behind this sudden surge in value? There are a number of factors at play here, including growing institutional adoption of Bitcoin as a store of value, a weakening US dollar, and increasing interest from retail investors looking to capitalize on the digital asset's potential for high returns. In particular, the growing interest from institutional investors has been a major driver of Bitcoin's recent price increase. Major players in the financial world, including PayPal, Square, and MicroStrategy, have all recently announced their plans to invest in Bitcoin, signaling a growing acceptance of the digital asset as a legitimate investment option. Another factor contributing to Bitcoin's surge in value is the weakening of the US dollar. With the Federal Reserve continuing to print money in response to the economic fallout from the COVID-19 pandemic, many investors are turning to alternative assets like Bitcoin as a hedge against inflation and a way to protect their wealth. Of course, there are also risks involved with investing in Bitcoin. The cryptocurrency market can be highly volatile, with prices fluctuating rapidly and unpredictably. In addition, the regulatory landscape around cryptocurrencies is still evolving, which means that there is always the risk of government intervention or changes to the legal framework governing the digital asset. Despite these risks, however, many investors remain bullish on Bitcoin and the potential it holds for long-term value growth. With more and more institutions and individuals adopting the cryptocurrency, it's clear that Bitcoin is here to stay as a major player in the world of finance. So what does this mean for investors and the future of cryptocurrency? Only time will tell, but one thing is for certain: the rise of Bitcoin and other digital assets is reshaping the financial landscape in ways that were once thought impossible. One key factor that we briefly touched on earlier is the growing institutional adoption of Bitcoin as a store of value. This has been a major driver of the cryptocurrency's recent price increase, as more and more large financial institutions are getting involved in the space. For example, PayPal, one of the world's largest online payment platforms, recently announced that it would be allowing its users to buy, hold, and sell cryptocurrencies, including Bitcoin. This move by PayPal is significant, as it marks a major step towards mainstream acceptance of Bitcoin and other digital assets. Similarly, Square, the payments company founded by Twitter CEO Jack Dorsey, has also been getting involved in the world of cryptocurrency. In October 2020, Square announced that it had purchased $50 million worth of Bitcoin, representing about 1% of its total assets at the time. This move was seen as a major validation of Bitcoin's potential as a store of value and a legitimate investment option. Another major player in the institutional adoption of Bitcoin is MicroStrategy, a publicly traded software company that has invested over $1 billion in Bitcoin since August 2020. MicroStrategy's CEO, Michael Saylor, has been a vocal advocate for Bitcoin, arguing that it is a superior store of value compared to traditional assets like gold. In addition to these high-profile institutional investors, there are also a growing number of hedge funds, family offices, and other financial institutions that are getting involved in the cryptocurrency space. This trend is likely to continue in the coming years as more and more investors seek to diversify their portfolios and take advantage of the potential for high returns offered by cryptocurrencies. Another factor driving the recent surge in Bitcoin's value is the weakening of the US dollar. As we mentioned earlier, the Federal Reserve has been printing money at an unprecedented rate in response to the economic fallout from the COVID-19 pandemic. This has led to concerns about inflation and a potential devaluation of the US dollar. Many investors see Bitcoin as a way to hedge against these risks, as the digital asset is not subject to the same inflationary pressures as traditional currencies. In addition, Bitcoin's limited supply, there will only ever be 21 million Bitcoins in existence, makes it an attractive option for investors looking for a scarce asset that is not subject to the whims of central banks and governments. Finally, there is also growing interest from retail investors in Bitcoin and other cryptocurrencies. With interest rates at historic lows and traditional investment options offering relatively low returns, many people are turning to cryptocurrencies as a way to potentially make a significant profit. The growing interest in cryptocurrencies can be partly attributed to the emergence of user-friendly online trading platforms such as Robinhood and Coinbase. These platforms have significantly simplified the process of investing in digital currencies, enabling even those with little or no prior experience to effortlessly buy and sell their preferred cryptocurrencies. By offering easy access, streamlined trading processes, and real-time market data, these platforms have managed to attract a substantial number of users, thus driving the increasing popularity of cryptocurrencies. In addition to their user-friendly interfaces, platforms like Robinhood and Coinbase have implemented innovative features that make investing in cryptocurrencies more accessible to a wider audience. One such feature is fractional investing, which has democratized the world of cryptocurrency investments. With this feature, users no longer need to purchase an entire Bitcoin or any other cryptocurrency. Instead, they can invest in a fraction of it. This allows individuals with limited financial resources to participate in the market and diversify their investment portfolios without the need for significant capital. Consequently, this has not only broadened the appeal of cryptocurrencies but has also played a crucial role in fueling the ongoing upward trend. As always, it's important to stay informed and stay up to date on the latest developments in the world of cryptocurrencies. So be sure to subscribe to our channel for daily updates and insights. Thanks for watching, and we'll see you in the next